If you could borrow one mind for money and one mind for life, you'd take Marcus Aurelius for the storms inside you and Warren Buffett for the storms outside you. One teaches you how to rule your reactions. The other teaches you how to rule your capital. Put those two minds in the same skull, and you get calm conviction, quiet on the inside, compounding on the outside. Most people never make that merger. They try to invest like Buffett with a mind that panics like a crowd, or they preach Stoicism while their portfolio is a slot machine. You don't need more quotes taped to your wall. You need a working fusion, Stoic operating system, owner's playbook. Think like Marcus. Invest like Buffett. Start with a picture. You carry two notebooks. The first is your meditations journal, a daily page for what you can control today: attention, behavior, effort, and standards. The second is your owner's ledger, a living page for what you own, why you own it, and how you will act when prices misbehave. Every morning, 2 quick entries. Every month, 2 quick reviews. The first keeps your hands off panic buttons. The second keeps your capital on a patient path. 2 notebooks, 1 life. Marcus first, because money follows mindset. Markets are opinion machines in the short run. Your nervous system is, too. If you let both run you, you spend decades reacting. If you are distressed by anything external, Marcus wrote, the pain is not due to the thing itself, but to your estimate of it, and this you have the power to revoke at any moment. That sentence is your investor's shield. Prices are not pain. Headlines are not pain. Your estimate, your interpretation, your narrative is the pain. Revoke it. Replace it with a simple inventory. What changed in the business? What changed in me? What is my rule? That's Stoic thinking in practice. Objective judgment, disciplined action, and willing acceptance of what you don't control. Translate it to the market. Objective judgment. Read numbers and primary sources, not drama. Disciplined action. Act by pre-written rules, not moods. Willing acceptance. Volatility is the toll you pay to cross the bridge to long-term returns. You don't argue with tolls. You either pay them or take a different route. Now, the Buffett part. He built one of the greatest fortunes in history with moves so plain they look like a trick when you finally believe them. He bought understandable, durable businesses, sized them within his sleep threshold, and let time do the compounding. He kept cash for flexibility, avoided leverage that could erase decades in a day, and partnered with people who thought past the next quarter. He studied, he waited, he acted rarely, and he owned for a long time. Time is the friend of the wonderful company, the enemy of the mediocre, he said. That's not poetry, that's policy. Here's the blend. Marcus gives you the control map. Buffett gives you the capital map. Put them together and you get a simple loop. Decide what matters. Decide how you will measure it. Decide how you will behave when it's hard. Practice those decisions until they are boring. Boring is not a bug. Boring is the design language of compounding. Let's make this personal with a story that doesn't end in fireworks. It ends in freedom. 2 engineers, Ria and Cole, graduate the same year. Same salary, same city. Ria carries her 2 notebooks. In her meditations journal, she writes, control, my savings rate, my research time, my rules. In her owner's ledger, she writes 5 lines about every position, what it is, why she owns it, when she adds, when she trims, when she sells. She sets an automatic monthly investment, chooses a global index fund as her base, and keeps a short list, 5 high-quality businesses she actually understands, around the edges. Cole prefers vibes. He watches charts on his phone. He likes action. He talks about conviction, but it's borrowed from strangers with thumbnails. He has no write-ups, only screenshots. He trades to feel and control, and with every click he donates control to fees, taxes, and his own adrenaline. 5 years in, Ria's life is quieter. Her ownership is higher. Her sleep is better. She doesn't feel like a genius. She feels like a builder. 10 years in, the difference isn't linear, it's lopsided. The market rewarded the person who combined Marcus's control with Buffett's calendar. You can do what she did. You can do it starting today. No guru required. Just choices repeated. Let's build your fusion. Mind first, money next, so it works when the world doesn't. Begin with a Stoic morning, investor evening. 5 minutes each. In the morning, write 3 lines. What I control today. What matters most today. What I will ignore today. In the evening, write 3 lines. What I learned about a business today. What I changed in my process today. What I will leave alone today. 6 lines. 60 seconds each. Your day starts with agency and ends with evidence. You don't need perfect days. You need consistent ones. Next, translate Marcus's premeditation of adversity to your portfolio. Premeditate the bad day. Not to scare yourself, to inoculate yourself. Write your storm script before there are clouds. Prices will drop fast someday. I will feel the urge to touch the button. I will not act for 48 hours. I will reread my write-ups. If the business is intact and the price is down, I will add within my sizing rules. If the business is broken, I will sell calmly and recycle capital. I will not negotiate with fear. I will execute my plan. You don't rise to the occasion. You fall to the level of your preparation. Write the floor you want to fall to. Now the Buffett side. Simple, sharp, serious. Charlie Munger put it cleanly. Take a simple idea and take it seriously. Here is your simple idea. Buy understandable, durable streams of cash flow at fair prices, own long enough for business results to dominate narrative, and avoid the 2 killers, over-leverage and overactivity. Take that seriously. What does take it seriously look like? It looks like circle of competence discipline. If you can't explain the business model to a smart teenager without buzzwords, pass. There will be another pitch. You don't have to swing. It looks like position sizes that respect your nervous system. If a 30% drop in a single position would make you do something silly, your size is wrong. Right size until you can stay rational. It looks like a base you can ignore. For most people, that's a low-cost global index fund. It quietly owns thousands of real businesses. It pays you for patience. Around that base, you can layer a small sleeve. Think 10, 30% of your highest conviction businesses written up in your own words. You don't need 50 names. You need a few you understand. It looks like cash that lets you wait. Cash isn't an opinion about markets. It's a tool for when markets give you a gift. Buffett keeps dry powder so he can move when others can't. You can, too, proportionate to your life. It looks like review dates, not review moods. Pick 2 dates a year, mid-year and year-end. On those days you rebalance to your target, harvest losses or gains tax smart if it makes sense, and update your write-ups. Outside those days, your default is hold. It looks like a tension that feeds conviction, not cortisol. Unfollow the circus. Read letters, reports, and books. Put primary sources ahead of punditry. Curate your inputs like your life depends on them, because your behavior does. This is not ascetic. It's athletic. You're training your mind to stay useful when it would rather be entertained. Let's go deeper into selection with a Roman lens. Imagine you're building an aqueduct. You care about 3 things: source, slope, and stones. Source is where the water comes from, reliable, clean, enduring. Slope is the gradient, consistent, not too steep, not too flat. Stones are the materials, strong, well-fitted, with margin for floods. Translate that to businesses. Source is the return on capital, the engine that turns inputs into free cash flow. If a business can consistently turn $1 invested into more than $1 of value, you have a live source. Slope is reinvestment, the ability to pour cash back into the business at high returns. If it can redeploy profits into more profit at similar rates, the slope runs to the city. Stones are the moat and balance sheet, what protects the flow when weather turns. Network effects, switching costs, cost advantages, conservative financing. You don't need perfection. You need reliable water, a steady gradient, and stones that hold under pressure. Price? Yes, price matters. But when you're buying an aqueduct that will flow for decades, you don't quibble over every pebble. You want a fair price for wonderful structure, not a wonderful price for a pipe that leaks. And when you own it, you don't hammer the stones every week to check on them. You inspect on schedule, clear debris, and let the water run. Let's make the money concrete without becoming a calculator. Suppose you automate $600 a month into ownership, your base fund plus a little to your best ideas. Suppose you increase that by a small percentage every year as your skills lift your income. Suppose you let those choices compound for 15, 20, 25 years, only touching your plan on those 2 review dates. Realistic returns, nothing heroic. That boring plan beats the vast majority of optimized plans that change with every headline. Not because you knew the future, but because you behaved well across thousands of presents. You'll still make mistakes. A Stoic Buffett blend doesn't promise perfection. It promises survival and progress. When you're wrong, be wrong small and quickly. When you're right, be right big and for a long time. That sizing alone changes your future. Here's a second story, short, specific, different. Amara loves brand new ideas. She calls them frontier. She buys a company with no profits but limitless potential. When the story wobbles, she doubles, then finds herself hoping, not analyzing. Her thesis? It's going to change the world. Jay loves cash machines. He chooses a dull business with pricing power, sticky customers, and a history of repurchasing shares when they're cheap. He reads the footnotes each quarter. When the business executes, he does nothing. When the price runs far ahead of the value, he trims back to his target and redeploys. His thesis? It keeps converting sales into growing free cash flow, and management buys back stock below intrinsic value. 5 years later, Amara has 3 epic stories, 2 big losses, 1 someday. Jay has compounding. He was not braver. He was clearer. Clarity comes from questions you answer the same way every time. What is the engine here? How does a dollar turn into more dollars? What protects the engine? Why can't a rival copy it or undercut it? What could break it? And what evidence would tell me it's breaking? What is a fair price for the next 5 to 10 years of cash the engine can produce? Write your answers. There are no extra points for poetic phrasing. There are fortunes for plain truth. We've talked mindset, we've talked money. Now stitch them with practices you can start before dinner. Create a 1-page commander's intent for your financial life. 1 paragraph on purpose. I build ownership so my time belongs to me. 1 paragraph on method. I automate contributions, keep a global base, and concentrate only where I'm competent. 1 paragraph on behavior. I act by rules, review twice a year, and size risk to sleep. That's your North Star. Build a friction kit that makes foolish actions hard. Remove trading apps from your home screen. Delete saved cards from shopping sites. Require a password you must type, not autofill, for any sell order. Add a 48 to 72-hour freeze on non-essential purchases. Your future wealth is the compound interest of your current frictions. Adopt a 2-tab rule for research. For any business you own or want to own, open only 2 tabs: the company's investor relations page and the latest annual filing. Only after you write your own summary in plain English can you open a 3rd tab for analysis from someone else. This keeps your estimates cleaner than your Twitter feed. Choose a sleep number for position sizing, not a mattress, a percentage. What's the largest position you can hold without checking it daily? That's your max. What's the smallest ad that feels meaningful but not reckless? That's your increment. Define both before you buy. Install Bounded Joy. Budget a fixed percentage for guilt-free spending on life's upgrades and shared experiences. Stoicism is not self-denial, it's self-direction. If you starve joy, your plan will revolt. If you feed only joy, your plan will collapse. Bounded joy keeps you human. Practice quiet pride. When everyone shouts about hot trades, feel private satisfaction about boring progress. Quiet pride immunizes you against envy, which is the interest you pay on other people's lives. And keep an owner's resume, not for a job, for you. A one-pager that lists your assets, your cash buffers, your contribution cadence, your skills stack, your rules, your review dates. Update it twice a year. When chaos hits, this is the sheet that reminds you who you are and what you do. There will be moments you forget all this. A sell-off will feel personal. A surge will feel like an invitation to abandon patience. Return to the two voices you borrowed. From Buffett, risk comes from not knowing what you're doing. The cure is not bravado. The cure is clarity, preparation, and humility about your limits. From Marcus, revoke the estimate that turns price into pain. Ask, what exactly changed in the thing I own? Not the ticker, the thing. If the answer is nothing fundamental, breathe. If the answer is something important, act by rule, not by reflex. You might be tempted to keep searching for a more clever system. Resist. In wealth, elegance beats cleverness. As Munger said, take a simple idea and take it seriously. This is your simple idea. Calm mind, long view, few moves, compounding engine. Take it so seriously that you design your environment to make it the default. The longer you live inside that default, the more your life starts to look like you planned it that way. Let's give you a 60-second action plan to cement this into muscle memory. Open a blank note and title it 2 Notebooks. Under Meditation's journal, write 3 lines you'll use tomorrow morning. Control, priority, ignore. Under Owner's Ledger, write 1 holding you own or want to own and answer 4 questions. What it is, why you own it, when you add, when you sell. Set 2 calendar dates 6 months apart. Those are your only strategy edit days. Delete 1 app or feed that pulls you into noise. Replace it with an annual letter or a book you'll read for 15 minutes tonight. Place a sticky note on your screen that says, calm first, rules second, action last. Do that today. Not perfectly, just done. A final image to carry with you. Picture a coin and a compass. The coin is your capital. The compass is your character. Flip only the coin and you'll chase every shine. New tickers, new trends, new tricks. Fix the compass and the coin goes where it ought to go. Into ownership that ages well, sized so you can sleep, held long enough for time to do its magic. Think like Marcus. Invest like Buffett. Control the only 2 levers that matter, your reaction and your horizon. Everything else is noise. If this helped you tighten your compass and put your coin to work, subscribe. Join a community that trains calm before clever, depth before drama, and process before prediction. We're building fortunes the old way, one boring, beautiful decision at a time. So your future self wakes up free and says, quietly, we did exactly what we said we'd do.